Hello, Will Chandler here with Mazuma Pro Money Matters. So, today I'm going to discuss life insurance. Do I need it and what kind should I buy? But before we get started, make sure you subscribe to the station down below and then make sure you click on the little bell next to it and then check all notifications. That way you'll be notified every time we upload a brand new video. So, stay tuned. Brought to you by Mazuma Pro, a lifetime money plan. Hello, welcome back. Will Chandler here. So today I'm going to talk about life insurance. Do I need it? What kind should I buy? How much should I get? So let's talk about whether you need it or not. So life insurance is not meant to be a permanent, full term, full life thing. It's supposed to be for a specific amount of time when your financial obligations are the highest and when you have dependents depending upon your income for their financial well-being. So if you have a wife, if you have kids, if you have a mortgage and a car and maybe paying for college, maybe your parents stay with you, you have some pretty big financial obligations. And these people are depending on your income to stay, moving forward in life, to stay at their level of life, to get this stuff paid. And a sudden death would just devastate them financially. So that is what life insurance is for. When you're young, when you don't have many assets, and when you don't have much stuff, and then you build in your working career through the years, and your income and your assets go up and your net worth goes up, 20, 30 years down the line, you should have built up enough assets and stuff that you're self-sufficient. You don't need life insurance in case something happens. If something were to happen to you, you have enough assets, you have enough net worth that your loved ones and your family, they can continue on. Your house might be paid off and stuff like that. So life insurance is only meant for when your financial obligations require it. It's not meant just for everybody. Not everybody needs life insurance. So, and then there are two types really of life insurance. There's term insurance and there's whole life insurance. So, term insurance is just like it states, it's for a specific amount of time, a specific term, 10 years, 20 years, 30 years, whatever. And then there's whole life, which that's basically permanent insurance. That's insurance for your whole life, and it has an insurance component and an investment component. So let's talk about that first. So whole life insurance, and there's multiple different kinds. You got universal whole life, and you got variable whole life. You got different types of whole life insurance, but they're all just variations of the same thing. They have an insurance component which pays out a death benefit, and then they have an investment component which is supposedly a cash value, right? You can invest in it tax free. But more about that in a moment. So let's say you're 20, 30 years old and you want a $500,000 policy, and then now you're going to go to this whole life policy, and the premium is going to be probably $300 to $400 a month for your whole life. It's going to be a big premium. And the reason for that is because you're funding the insurance portion of it, but you're also funding this investment account over here. Now, at the end of this policy, you're going to get $500,000, right? You're not going to get millions of dollars from this thing. So my opinion is you never want to combine an insurance plan with an investment plan. You want to keep the two vehicles separate. They were never meant to be combined. Insurance is for insurance. Investments are for investments. So $500,000, about $300-400 a month maybe. So now term insurance. Term insurance is totally different. You're going to buy that for a 10-year period or a 20-year period or a 30-year period, and you're going to have a set death benefit only. And then when that term expires, boom, the insurance is gone. You got to buy a new policy. So you can get someone who's 20, 30 years old, you can get $500,000 worth of insurance for maybe $30 or $40 a month. That's a big difference. $30 or $40 a month for 30 years, $300, $400 a month for 30 years. And yes, they're probably 8 to 10 or more times expensive the whole life as opposed to the term. So now you got this $500,000 death benefit for your term insurance, which you're paying $30, $40 a month for. So let's say you buy the term insurance, you save $260 a month at least by buying the term insurance. You can take that $260 and invest it in an IRA, Roth IRA, 401k, mutual funds, whatever you want to invest that money into. And then over the course of 30 years with compound interest, you're going to get a way bigger gain than $500,000. So let's say you're paying $40 a month for your term insurance. Let's say you die at 29 years later. So you've been investing $240 a month or $260 a month for 29 years. That $260 a month for 29 years is going to grow probably over $1 million. And then you died in 29 years. Then plus you get the $500,000 death benefit from that term insurance. With whole life insurance, you get to the 29 years and die, you get the $500,000. And then what else do you have? Nothing. So investments and insurance should always be kept separate. So don't buy insurance if you don't need it. Life insurance is for when you need life insurance. It's for when you got a lot of obligations and you got people dependent upon your income, dependent upon that money. Their life is going to be devastated if something were to happen to you and they were to lose that income. So buy term insurance, invest the difference, and you're going to be way better off. But do not buy it unless you need it, and never, ever, ever buy whole life insurance. Thank you.